Good morning. It's 2 a.m. I'm recording the London session, which starts at 3 a.m., ends at 11 a.m. As you can see here, I drew out the Asian session, which starts at 6 p.m. the night before, ends at midnight, because I want to mark the low, which is here, 43.8750. And I'm going to mark the high here at 4402.25. And I'll put in here Asia high. And there it is, Asia high, Asia low. I also marked out, this is Friday's session. I'm on the 5-minute chart. And it's from midnight, Friday, June 23, all the way to midnight for Monday, June 26. This is when Asia opened last night at 6 p.m. or 1800 military hours. And as you can see, for this entire day, Friday, started Friday, ended last night, the highest price went was 411.250 up here, and the lowest is 438.125 down here. It's Friday low. So let me just put Friday high so it's easy to follow. And these are important because I need to see how price reacts once it hits those highs and lows. It'll either tell me it's going to continue lower when it breaks Friday low, or turn around and come up for the high, or it's going to go higher once it hits Friday high, or turn around. And that's when I take my trade. I'll probably take one before then if my trade sets up once it hits Asia high or low. But right now, as you can see, price is at 439.74.75, which is between Asia's high and low. It's 2 in the morning. Now, what usually happens is between 2 a.m., 3 a.m., it'll set up a trade for me to take. And I usually enter between 3 a.m. 4 a.m. That's when you set up. I have a strategy. I have two strategies actually where I use, you guys don't know it yet, but I'm going to use the term so you can get used to it, but I'll break it down eventually, where I use breakers and order blocks along with fair value gaps. But I'll teach you what a fair value gap is. That's these imbalances in the red and green boxes. They are fair value gaps. And a breaker is something that's formed when price makes a pattern to show you basically which direction it's moving in. And it usually happens after it breaks a high or low. And order blocks are candles that trade in the opposite direction, but it shows you price is going to continue in that direction or turn around. But again, I'll teach you that, and that'll be part of building your strategy, actually part of watching price action. So far, yesterday I had said in the video for the setup for the week that it looks like price wants to go up slightly. If you recall, let's go to the 90-minute. And it was showing me that price wanted to go up slightly, which is a retrace, to come down to equilibrium into this green box, which is a imbalance or fair value gap, to to go back up into this red box. The big red box is a weekly imbalance, which is a bearish imbalance, and the small one is a daily imbalance. So what price usually does is it'll come up, break a short-term high, which is this candle right here, 1333 on a Friday, short-term high, come back down to equilibrium into this fair value gap, which is a bullish fair value gap, which means it'll take price higher. It'll hit the big red imbalance, come down, break that low that it made when it came down initially, go back up into the small red box to come back down. And just that's how price moves. But you have indicators that shows you it's most likely to turn around or stop or reverse completely and go in the opposite direction. But again, you'll learn that this is how price moves. It'll probably go up, break that high, come down into the green box, equilibrium of the price range, go up into the red box, which is the weekly fair value gap, come back down and break this low and that low, and then go back up into the small, another screen, back up into this small fair value gap to come back down. So go back up into this small fair value to come back down and go lower. So overall, the trend will be low. It just keeps going lower. It'll go high, but it won't go higher. It'll break short-term highs, but it will eventually keep going lower until you see any sign that it wants to turn around and go higher. So for now, I'm going to watch this the 90-minute. What it should do is set a low. Should have set a low at 130 or a high. Let's see what it did. Traded into an imbalance. Made a high 145. At 2 o'clock it came down and broke a 120 low. Yeah, break this low. It also broke 2121 low, which is an auto block. So it looked like it sent price going up. It didn't close below any of the lows, so it's indicating it wants to go higher. So I suspect between 2 and 3, it'll come up and at least break this high or even the Asia high. But we'll sit and watch and see what price wants to do. But right now, it looks like price is on its way up. So it looks like price wants to go up. And it will either stop here and turn around, come back down towards Asia low, or it'll actually continue, break Asia high, and then turn around to equilibrium of the price range, go back up, make a short-term high, come back down. But we'll see. And if my setup happens somewhere in this price range action, I might take a trade. I'll record it for you guys. But let's watch price on the 5-minute chart. Let's see, while we're doing that, what I usually do is show you my 15-minute chart because I'm watching price on that as well. This is the 15-minute chart and it's showing Thursday's price range as you can see here. And Friday traded a bit lower than Thursday. And then this is Wednesday, which traded a bit higher than Thursday. So as you can see, price is on its way down. So Monday traded basically in a straight line, came down on Tuesday, traded lower on Wednesday, which is this, and lower still on Thursday, and lower on Friday. So price is trading lower right now. I don't see any indication of it wanting to turn around. But once it does, price will let us know it wants to turn around. So even though I'm watching 5 minute on one chart, it's the 5 minute up close and personal. I also have the 15-minute chart that I'm watching. And where is it? I'll bring it back up. Yep, the 15-minute, which is this. What I usually have on another screen is my hour and 4-hour chart, which is here. I have so much price here. So this is my hour chart on the right, 4-hour on the left. And as you can see, price is moving down. Price is moving down. But the way you trade is you trade in between the price action while it's going down. So if I say price is bearish, it means price is moving down. If I say price is bullish, it means price is moving up. When price is moving up, if you want to trade price going up, you buy price up. If price is moving down and you say it's bearish, it's moving down, you sell price down. So you buy up stuff, you sell off stuff. But again, we'll get into that in due season. But for now, like we said, it looks like price wants to move up a little higher. I'm going to watch it at this high. And that's what you have to do. Sit here and watch price. Most of trading is just sitting and waiting because you have to watch price. If it gets to this high, I want to see what it's going to do, how it will react. And this is another short-term high, another short-term high, another short-term high on its way to the Asia high, which is the highest price traded during the Asia session, which is 1800 at 6 p.m. to midnight. So let's watch price and see what it does. Go down to the 2-minute is what I'll do. And price is trading down into an imbalance, which is a bullish imbalance here. The yellow candle's going up, the red candle's going down. So it'll either totally disrespect this, or it will and continue up. It could totally disrespect this and continue down. But let's see what price is going to do, where it's going to close. This is called tape reading, candle watching, reading price action. You have to watch the candles. You have to learn the characteristics of the candles. It's the most time consuming part of it, but the most important because the candles will tell you which direction price is moving in, where the algo is taking it. You notice price traded down into this green box that says FVG. It's called an imbalance or fair value gap. It's a bullish fair value gap because it was created by bullish candles, which really on other people's chart is green. So price going up, it created this imbalance, which is a bullish imbalance, which means when price trades down into this bullish imbalance, it should react by going up, rejecting lower prices, going higher. This supports price going higher. And that's what it did. It traded down into this green imbalance, rejected lower prices, and it's now going up. We don't know how high it'll go. Again, I said I think it's going to come at least as high as this high. Why this high? Massive. Why that high? Because this high is connected to this low. At 124 low, 146 high. And this low took out all of these lows, all of them. And what price likes to do is once it comes and it takes out those, it'll go back up, take out highs, short term. Then it'll come down, take out short term lows. So you see it went up, take out the high, came back, took out the low. Now it wants to go up and take out the high that started the low with these, which is this high started this low. May not go that high, but let's see. Again, like I said, price moves, up, down, up, down, up, down, kind of pattern, not a straight line, very seldom. And that's because it's balancing, rebalancing, balancing, rebalancing, balancing. Or it go to premium, equilibrium, premium, discount, premium, equilibrium. That's what price it's just perfect at balancing. Okay, let's see. See, they're doing something here short term on the 5 minute. It says it may want to start to trade lower now because it came up and it broke the 220 candles high. As you can see, the red candle broke that yellow candle high with the wick, but it came down and it closed lower than the high. So it shows it wants to start to move down a bit. I suspect now, yep, that's what it's doing. Price is heavy now. So it's going to take out a few lows. This white line is red. I have to see how it reacts to this because this is an order block, a bullish order block, which means when it hits this 43.92.75 level, it could just retrace up a little, probably into this bearish, which is the red box made by a red candle going down. Fair value gap or imbalance to come down. So may do something like this. Move may not be that big. But let's see. It's just me tape reading. I'm looking for my setup. I don't see anything yet. And my setup is it breaks a high or a low, price comes back and closes within the range. Then it moves up, breaks a short-term high, creates a market structure shift, tells me, oh, price is moving up because now it's breaking highs, creates a fair value gap. Price comes back and trades into that fair value gap to support price to go higher. I take my trade when it comes back to the fair value gap. And I trade up. But because price is on the downward trend, I'm looking for it to break a high. Let me move this and show you what I'm looking for with my strategy. I'm looking for price to go up and break a high, turn right down, break a short-term low to show me it wants to go down, and it created a fair value gap right here. Turns around, trades into that fair value gap. That's when I enter for price to come down and break these lows. So I'll trade from a fair value gap and it goes back up down to these lows the price wants to break. But I don't see it happening right now. I don't see a setup, so I'm watching price. But that's part of being disciplined. You come up with, after you've learned all this stuff and still learning, you come up with a strategy you're comfortable with or that you can identify easily. That would be your trading strategy, which I'll record for you guys, my trading strategy. But you have to build your own because you have to learn. You will. It's going to take about a year. So, newsflash, guys, it's going to take a year at least for you to learn everything, be able to understand the language, watching price every day, anywhere from 2 to 10 hours a day. The more the better. So you see what the algo does and how price moves, and you'll be able to identify certain features that will show you if price is going up or down. And then you will figure out a strategy based on what you see. But we'll go over all of that. Don't forget, whatever questions you have, put it in the YouTube comments below the videos once I post it, because I'm going to go back to those videos and I'll make videos on your comments so you can have it. And I'll clarify everything. But as time goes on, probably before the end of this week, I'll start to break it down and start from scratch for those who've never traded. You have to have pen and paper to take notes. Ask a lot of questions, but you have to take notes and you have to review. And I'll refer you to some videos you may not understand initially, but watch it and keep watching it, because you have to get used to the terminology. And once you do understand and you watch it again, it will be so clear. So watch it as if you know what it's saying, even if you don't. So all videos I recommend, you have to watch. You can't take notes because you don't know what to write down, but at least you'll be watching. Okay, price trading in a line, a straight line. As you can see, it's not breaking any highs, because here it is. That's the size it's on, and it's not breaking any lows because it's low. So this is what we call consolidation. It's trading basically in a straight line from left to right, which is fine, because once it breaks out of this left to right movement, it'll tell us where it wants to go. See, it's trading in a straight line. It's not breaking any lows. From 2 o'clock, it's the lowest it's traded, so it'll come down, and it's not breaking any highs. From 2 o'clock, it's the highest it's traded, It's not gone any higher. So this is what we call consolidation, which is a good sign because then once it does break out, usually if it breaks up, it shows it's only going to break up to fake us out to come back down. If it breaks down, it shows it's only going to fake out to trap us, then it'll trade back up. That's the manipulation. So it's consolidation, manipulation, distribution. Called the power of three. You'll learn that as well. The reason I shrunk my screen like this on the 5 minute chart is if you look at Friday, which is here at midnight, right up to where we are now, Monday at 2:40 in the morning, price has been consolidating. It's trading within a range, this high and this low. Straight line, straight line, instead of going lower or higher. As you can see, Thursday did not trade in a straight line. It started to from midnight, but then it broke out at 10 in the morning and it went higher. Then it came back into the range. On Friday, didn't do that. It continued. That's Thursday's high, Thursday's low. Came back into the range and continued in a straight line. And it's still going in a straight line, basically, within a range, bouncing back. Bounce it back and forth, up and down, up and down. So it should make a break. And again, usually when price trades in a straight line and it breaks a high, it's a fake out. It wants people to think price is going higher. Oh yeah, you're gonna go in and buy price higher. But then it turns around, trades lower. It's just a fake out, but that you'll learn. And again, consolidation. If it trades lower, starts to break a few lows, usually indicates price wants to go higher because it's just a fake out. That's what the algorithm does. So we're looking for a breakout. I'm not going to take a trade, not going to take a trade because I know how price moves until it breaks Asia low and it shows me it wants to continue lower or reverse. I'll follow price, or Asia high and it shows me it wants to go higher or reverse. I'll take a trade. But as long as it's between Asia low, Asia high, I'm not going to take a trade because it's consolidating. I also need to watch how it reacts with Friday's low here and Friday's high here. So really, I'm just watching. I could spend all day watching price, and if it does nothing, I do nothing. If it stays within these four ranges, Friday high, Asia low, Friday high, I'm not doing anything. It's not a good trade because price is still within the range. And why am I not going to do that? Because as long as price is trading within a range, if I get in between the range and I set my stop loss at a high if I'm trading down, or at a low if I'm trading high, because it's in a range, it's going to come and hit my stop loss. Losing trade because it's not moving. Whereas the price is going down and I put my stop loss at a high, it's going to move away from my stop loss. If price is going up and I put my stop loss at a low, it's going to move away from my stop loss. Stop loss is a level that you set your trade at so that if you are wrong and price turns around on you, that's the highest amount of money you will lose. So if you're taking notes, write this down. When you're learning to trade, you must learn to trade with a stop loss and a take profit. Never enter a trade without a stop loss, which minimizes and manages your losses, or take profit, which teaches discipline and you lock in your profits. I'll repeat it. I will repeat that. A stop loss and take profit is part of your risk management. And in trading, that is just as important as anything you will learn. Actually, in many cases, it's more important because the goal is to reserve capital, not to lose money. Even if you make $1 profit, you didn't lose any money. If you have a stop loss in and you have a $200 account and you say, I'm going to risk 1%, that's $2. You set your stop loss at $2 loss. At least you could take 100 trades if you keep losing $2, as opposed to not having a stop loss in and you lose $200 in one trade. So your stop loss is what you use to manage losses, and your take profit is what you use to lock in your profits. Okay, I'm seeing something. 15-minute. As you can see, these were lows. Price came down, took out the lows by that blue line. Look at it. But it didn't continue lower. It's moving higher. So it's telling me price may make a move to these higher short-term highs. This is the high. It started the price range down for that low to take out these lows. Price usually wants to come out and take that high to come lower. So my eyes are watching this high right here by the blue line to see if it goes up there, if it'll react. If, again, you have to have your targets and see your ifs, then. You always say if, then. If price continues higher, takes out the short-term low, shows it wants to go higher, then I'll watch to see how it relates to Asia high. If price takes out the short-term low, it goes up, comes back down, continues to break lows, then I will watch to see how it relates to the weak opening gap and the Asia low. And this is what you do until you see your setup. Again, I'm not taking a trade until it either hits the Asia high or the Asia low, because it's still trading within the range. Watch the cursor. Low, Asia high, Asia low, Asia high, Asia low, Asia high. Nothing has happened. And I zoom out to include Friday. That's Friday. Where we are now. It's bouncing in between Friday's high, Friday low, Friday high, Friday low. It's not doing anything. Not good trading conditions. Price has to show you it's moving, and it's moving in a direction. High probability trades. This is interesting. The 2-minute, it's creating a bullish imbalance. Bullish imbalance, fair value gap. Yellow candles, which are up close candles, creating a bullish imbalance. Those are some of the hints that price drops to say, oh, I may want to move higher now. So if it keeps this imbalance, what price would want to do is come and trade back into this imbalance to move higher. So that's what price does. It's like a springboard. It'll move, go up, create bullish imbalances, order blocks, breakers, trade back down into it and bounce off of it like a trampoline. Does the same thing when it's going up. It'll create bearish imbalances, order blocks, breakers, and it'll trade up into it, and we get rejected and push back down. So let's watch this. Let me open this so you can see. This is good. Let's see how it is. Price came down, break this low right here to the left at 202. So it swept that liquidity, break that low, did not go higher. It came back up and closed higher than the low it created when it break this low, which indicates higher prices. And it continued going higher, created a bullish imbalance, which means the price comes back into it. It's showing that it wants to go higher. And price right now, drawn liquidity, from what I can see, is this high here at 146, because this high is the beginning of the price range that came down and broke the previous low. Came back up, came down, and broke the old low. This is the price range that started this new break for the low. So it probably could just come as high as this one because this is the price range that started below that took out the most recent low. But again, price watching, this is what you do. Let's watch and see. This could be a manipulation short term. But from the looks of things, it looks like it's giving me a setup, which I won't take, but I'll talk you through it if things works out. So this is my setup. Price came down, broke a short-term low, red candle, yellow candle open, closed higher than the red candle because now that's the new low. This low at 242 is lower than this low at 202. If price is going down, it should always create lower lows. But the next candle came up, closed higher than the new low, which indicates it wants to go higher. Next candle open, traded higher. We had a little bit of a breather or retrace here, which is an order block. Next candle open, broke these lows to the left, these highs, sorry, to the left. You see these candles? This yellow candle traded higher than these, so it took out those highs and closed higher, which indicates price still wants to go higher. Next candle open, then up, break this low to the left, closed high. It created a fair value gap. Look at this candle now in action. It's trading down towards this imbalance, which means it should trade into here and turn around to go higher because price wants to balance. This is an imbalance. I will teach you what makes it an imbalance. So the price trades up and it creates an imbalance. In order to balance it, it has to trade back down. It's like paint. You paint a wall, you take the roller and you paint up. You can tell it needs another coat, so you paint back down. So let's see what price does with this imbalance. This bullish fair value gap. It should trade down into it and then move higher if price wants to go higher, but that's what it's looking like. So I'm thinking price is going to come into this box, balance price, and then break this high. And I don't know if it's going to continue higher because I have to see how it reacts to this high. Does it break it and immediately turn around, close lower, or does it break it, close higher, and continue climbing? But we shall see. Let's watch. Now with this, what I would have done, this is a buy, even though I said I'm looking for sales. This would be a buy higher because that's what price is showing me. If I was to take this trade, I would get in. There we go. There we go. There's price trading down into the imbalance, as you can see. It's trading down into the green box to balance price. Now, if I was to take this trade, I would enter here. Stop loss is 16 points. If, this is not my setup, if, and then target this high. Now, I don't like, tell you what I don't like, the fact that it traded past the imbalance. But let's see if it closes higher or within the imbalance. It's still giving me a hint that it wants to go higher. But if it closes lower, I'm going to have to watch it. But this is a trade setup that I would have taken, which I'm not, because I'm not 100% confident in it, because it didn't give me signals that I was looking for earlier, which would have been